welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is Romain Diaz, founder and CEO of Satgana, a Luxembourg-based venture capital firm that invests in climate tech. Today, Romain will share with us his outlook for VC investing in climate tech, including the greatest opportunities, challenges, how the firm integrates ESG, and more. Before we dive into the conversation with Romain, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Hi, Romain. Thank you so much for being with me today.
My pleasure. Thank you so much for having me.
Absolutely. So to kick off the conversation, tell us a little about yourself, your firm, and how you got to where you are today.
Sounds good. So I'm Romain Diaz. I am originally from France, as you can hear from my accent, but we run a firm which is based in Luxembourg because it's a great environment to start and manage funds, especially when we do so on a global basis. So I'll tell you a little bit more about the firm, but shortly about myself. I'm 36 years old, and for the past 5 years, I've been running, raising, managing this first fund. Previously, I was an entrepreneur on the African continent, where I co-founded a number of businesses in Africa for about 10 years, and now turned investors, focusing on the big topic of climate, which is not so much a sector, but more a broad, overarching theme that touches around upon many different sectors and industries that I'm very happy to talk about. And we are currently deploying out of a first fund, which is a 8.5 million euro fund. We currently count 27 portfolio companies across 15 countries in Europe and Africa. And we typically invest at early stage, pre-seed, seed stage, and then roll up our sleeves to work alongside founders to build meaningful, impactful companies at scale.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience. EisnerAmper, let's get you ready.
Romain, given your focus on venture capital investing in climate tech, I would love to hear your high-level outlook for the space.
Yeah, so there's a number of various, I would say, factors that come into play that are making the sector look great or bad, depending on which lens you look at it, or not so much a sector, more of a theme. Obviously, at the moment, for the past 12 months or so, and especially since Trump arrived in power in the US, the sentiment has shifted towards anything. We don't even really talk about ESG internally so much anymore. But the big topic of climate, I even heard someone recently say the C word to talk about climate, because especially in the US, but also in Europe had to rewire a little bit its narrative around climate, and showing that investing in climate is not just because of a sort of moral imperative, but it is really about rewiring industries. And I'm happy to talk about the opportunities that we see in the space. But of course, climate is having a bit of a challenging, rough time, I would say, because of everything that's happening in the US, and then has ripple effect globally. But there is, at the same time, a deep rewiring of industries across all sectors that's maybe a little bit more quiet than it was a few years ago, where it was all about ESG and climate and so on. That was very in fashion 5 years ago. It's maybe less in fashion right now, but the builders are building, the investors are investing, and real change is happening across all industries. So we remain very bullish at the moment of what's happening, a little bit more quiet in the background. And that is going to just be a matter of time before we see these big, scalable, profitable, impactful companies coming to light and showing that it's not just the moral imperative, but it's actually sound and good business.
And Romain, more specifically, what are some of the greatest opportunities you see in your space now, and why?
Yeah, so the way we look at climate is not so much a sector, obviously, but more like typical industries where decarbonization is having a tailwind, basically because of net zero targets, but also because of regulation and because of a number of factors that create heavy pressure for transportation, for food, for agriculture, for energy, for the circular economy to basically change the way that the sectors and industries are operating. And what we're excited about specifically is anything that provides a form of green discount. A couple of years ago, Bill Gates was famously talking about the green premium and the need to invest in hard to decarbonize or hard to abate industries that might have a green premium, and looking for these corporate buyers in particular that would be happy to pay this green premium to catalyze industries. At the moment, this is a very difficult or hard to invest segment, I would say, or type of solution. So what we're particularly excited about is anything that provides a green discount. Famous examples is renewable energies. We don't really invest in infrastructure because we're early VC investors, or we're more about catalyzing new breakthrough innovation. But renewable energy is a very typical example that's easy to understand for anyone. To say that right now it is either at cost parity or even below incumbent solutions like fossil fuels, and deploying renewable energies the same way. It's the same. It's a similar type of reasoning for example, EVs and a number of other solutions that are arriving either at cost parity or even at green discounts. That's the kind of solutions that we look for, led by purpose-driven, mission-driven founders that are exceptional, with an outlook to rewire industries, with a 10-year outlook, with strong tailwinds, whether they're political and helped by regulation and so on, but not only, especially when they're based on good business fundamentals. That's the kind of businesses that we look to back.
Romain, on the other hand, what are some of the greatest challenges you face in your space and why?
At the moment, it's mostly perception, to be honest. So we've raised the first fund, which is, as I said, an €8.5 million fund. We've invested in 27 companies. And a couple of years ago, I would say that there were a lot of LPs who were very convinced by this new narrative that it was possible to, and I'm doing quote unquote, do good and do well at the same time. At the moment, I feel like there is a perception that climate is less hot, if I may, the pun, and that because of that, it is a less investable industry compared to some other segments that are maybe more hot right now, like AI, although we do invest in a lot of companies that leverage AI for climate solutions, but like AI and defense and still, blockchain applications from time to time, boom and bust. It goes on and on in cycles, but there are other topics that emerge. And so at the moment, there's still a perception that climate is less investable. But again, we see it at the underlying level, and we see it from our pre-seed, seed to Series A portfolio that a lot of companies are scaling fast in terms of technology, in terms of unit economics, in terms of commercial developments. And these are the kind of companies we're excited about. But there is still a perception right now that it's less investable. So that's kind of what we're trying to show, both by the narrative, but also obviously by the numbers and by the typical markups that we have in the portfolio, to convince investors and LPs that it is actually a very profitable space to invest in, especially if we look at it from a longer term outlook, 5 years, 10 years. Then for us, it's a deep rewiring of all industries that will be very profitable and impactful for LPs.
Romain, given your focus on climate tech, we'd be remiss if we failed to discuss ESG and how that's incorporated into your firm.
Yes. So for us, ESG, even though we don't, raise the ESG flag very loudly or call it so much this way, but it is still very much embedded. So we try to walk the talk and walk more than we talk. But it is very foundational to how we operate from the investment screening. So really integrating ESG at every step of the due diligence process, from initial screening to deep due diligence. We also do a lot of impact measurement and monitoring with our portfolio companies to help them really incorporate ESG, especially when it comes to gender, which is a very important topic for us. Internal practices, good governance are very much embedded in how we operate. And we're also B Corp certified. So as a management company, we really show that it's not just our portfolio companies and underlying investments, but it's also how we operate ourselves. Also because we're based in Luxembourg, which is, after the US, the second biggest fund jurisdiction in the world. And so being one of the first asset managers based in Luxembourg to be certified B Corp is also to try and show that it is about catalyzing more investments towards ESG practices for ourselves at our small level, but also to hopefully inspire many other bigger investors and bigger asset managers to integrate ESG practices as a way to not only do good, but also to reduce risk and in the end to do well for LPs and all stakeholders.
Romain, we've covered a lot of ground today and wanted to see if there are any final thoughts you would like to share with us.
Well, we are always very keen to work with founders. Obviously, we're building groundbreaking solutions that will make a dent in net zero goals and do it in a very, profitable and business savvy manner. But also LPs, whether they are mission driven and they do it because they're convinced that climate is the right thing to do to invest in, among others. But also LPs who are not necessarily climate driven, but understands that it is a deep rewiring of all industries. And we have a number of these type of LPs in our first fund. And that's also the kind of LPs we're hoping to attract and speak to, is those who don't necessarily do it for impact-driven mandates, but also for pure financial mandates. Because if we look at our metrics, we're very proud, and we think that it's going to keep on attracting LPs who are purely driven by commercial returns based on the kind of financial outcomes we're seeking for our LPs.
Romain, I wanted to thank you so much for sharing your perspective with our listeners.
My very pleasure. Thank you so much for having me.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.